This is the Southside School of Financial Freedom Watchlist and Market Report for the week ending December 4th, 2021. Our question this week is, what is a REIT? The answer will be provided later in the video. This week the market ended lower. The Dow Jones Industrial Average decreased minus 0.17% on Friday and was down minus 0.91% for the week. The S&P 500 decreased minus 0.84% on Friday and was down minus 1.22% for the week. The Nasdaq decreased minus 1.92% on Friday and was down minus 2.62% for the week. Looking at the week, we can see that there were 6 up finishes versus 9 down finishes for the major indexes. On Monday and Thursday, all the major indexes, that is the Dow Jones Industrial Average, the S&P 500, and the Nasdaq finished up. On Tuesday, Wednesday, and Friday, they all finished down. The new unemployment claims were 222,000 versus 240,000 expected. Non-farm payrolls in November increased by 210,000 versus 573,000 expected. Pending home sales jumped 7.5% in October. Mortgage refinance demand plunged 15% last week. The CDC confirmed that the first case of the Omicron COVID variant was detected in the U.S., and Fed Chairman Powell announced that the Fed would discuss quickening the pace of bond buying tapering when they meet later this month. New unemployment claims, non-farm payroll changes, the increase in pending home sales, mortgage refinance demand, the first case of Omicron COVID variants in the U.S., and Fed Chairman announcement on bond buying tapering are all news. And news drives the market, good and bad. Day-to-day predictions on whether the market is going to go up or down is virtually impossible, because predicting the news is impossible. However, the market is rigged to go up. It does not go up every day, but the market will generally go up over time. Stock prices move in a random fashion. They go up and down with an upward drift. The market will continue to go up because the powers that be want the market to go up. While there are many powers out there, the top 5 powers that be are the Federal Reserve, big financial institutions, big corporations, the President, and Congress. These 5 entities will do what they must to drive the market higher. Now we are at our question of the week. What is a REIT? A REIT is a real estate investment trust, and it is a company that owns, operates, or finances income-producing real estate. REITs buy various types of real estate, including single-family homes, offices, apartment buildings, warehouses, retail centers, medical facilities, data centers, cell towers, infrastructure, and hotels. Most REITs focus on a particular type of property, but some buy and hold multiple types of properties in their portfolios. REITs issue shares to the public through the stock market, which enables individuals to invest in various types of real estate properties by buying REIT shares. REITs must, by law, pay out most of their taxable income to investors. Thus, many people are attracted to REITs to receive dividend income. It is much easier to invest in real estate through a REIT than it is by buying and investing in real estate directly. REITs allow anyone to invest in a portfolio of real estate assets the same way that they invest in other industries by buying stock. However, REIT investors do not enjoy the same tax advantages of direct real estate investors. Stockholders of a REIT earn a share of the income produced by the REIT without having to go out and buy managed or finance real estate property directly. Do you own a REIT? Do you own any stocks at all? If not, why not? Is it because you do not understand anything about the stock market? Well, it was not taught to you in school. You are going to have to teach yourself if you ever want to learn how to get wealth and income through the stock market. You must RSI. Read, save, and invest. Formal school taught you how to read, but society and the powers that be discourages you from reading, especially books. School taught you to be a worker. They did not teach you how to be an investor, and they taught you nothing about the financial system. You can learn how to be an investor if you simply start reading books about investing. Books that you can borrow from the library or buy cheaply online. It is not difficult to learn how to be a passive investor, which is how most people should start. Check out this list of recommended books on the books page of the Southside website. These books and others like them will not tell you which direction the market is going to go, but you can learn how to make money in the market no matter what the market does. I don't know which way the market is going to go, and I don't care. I trade the market as it is, not as it should be. I take what the market gives me, whether it's going up, down, or even sideways. How do I do that? I apply the Southside strategy. You can learn more about the Southside trading strategy at southsideschooloffinancialfreedom.com. Here is my trading watch list from the week ending December 4th, 2021. I trade at least 3 of the stocks on the list every week. The strongest performer on the list this week and for the second week in a row is Abbott Laboratories. Ticker symbol ABT. It's in the third column. It increased 3.49% for the week, and it was up 1.47% on Friday. Abbott Labs' business is the discovery, development, and the sale of a diversified line of healthcare products. Looking at a summary of results, you can see that Abbott Labs has increased almost 19% year to date. I did not trade Abbott Labs this week, but I have generated cash flow from it in the past. Whether a stock goes up or down, you can generate cash flow from it. Whether you own a stock or not, you can still generate cash flow from it using the Southside strategy. The Southside trading strategy involves trading for weekly cash flow. That is trading for income. SPY is shown at the bottom of the third column. SPY is the S&P 500 ETF. This is the benchmark I compare my trading performance to. My objective is to beat the S&P 500 index while at the same time generating cash flow. Most professional money managers do not consistently outperform the S&P 500 index. They usually lose and lose badly to the index. Thus, most investors and traders should just invest in or trade a market index fund or ETF like SPY. What do you do? Do you beat the S&P 500 index? Do you have a watch list? What is your investing and or trading strategy? How well do you do against the S&P 500 index ETF SPY? Let me know in the comments section. Are you willing to share your strategy? The Southside portfolio is not outperforming the S&P 500 index ETF SPY. The Southside portfolio is up only 1.94% versus 21.27% up for SPY, a difference of 19.34%. The Southside is losing to SPY by over 19%. The primary reason the portfolio is losing is that the Southside is heavily invested in Bitcoin. And Bitcoin took a big hit earlier this year. It has been very volatile, going up and down, but it has dropped for the past 3 weeks in a row. It is now in bear territory. The portfolio is 77.71% in a Bitcoin trust. Equities, including puts, calls, and ETFs, make up 21.66% of the portfolio. Cash is 0.63%. The cash flow generated for this week was 0.51% of the portfolio account value. The account value changed by minus 7.52%. Meanwhile, the S&P 500 ETF SPY changed by minus 1.21%. I sold option contracts on 2 positions this week. They were both calls that ranged from $205.36 to $434.05. You can get more details, including the total amount of cash flow for the week, on the website Southside School of Financial Freedom.com. Check out past videos for other questions of the week. They are listed in the description section. Please like, share, and subscribe.